Welcome back to the show. Today I'm excited to be joined by Beau Eckstein, SBA loan expert, real estate investor, and franchise funding advisor. Beau specializes in helping investors structure creative financing for cash flowing assets, and in this episode we're diving deep into motels, bed and breakfasts, and RV parks. Whether you're looking to acquire, refinance, or expand, you'll want to hear what Beau has to share. Hey Beau.
Hey Bill.
What makes motels, BnBs, and RV parks attractive assets for investors in today's market?
We have a lot of short-term rental investors in the single-family space that graduate and say, hey, I don't want to deal with the regulations and I want to invest in an asset that's already zoned for this type of use. And plus, it's economies of scale, right? You can have more doors, more pads, etc., and you can leverage as opposed to having 10 short-term rental single-family homes scattered throughout Florida and Nashville and all these places. So I think that's what really makes it attractive to a lot of up-and-coming operators and existing investors.
What financing options are typically available for these types of hospitality properties?
Many of these are going to be financed with the SBA 7A, the SBA 504, or perhaps the USDA BNI. All three products are government-guaranteed loan products. And USDA is going to be used for more of the rural, and most of these properties are rural, although not all the time is USDA the option to go with because it's going to take longer. It's a bigger underwriting process, but sometimes it's a good fit for many reasons.
How does financing a motel or RV park differ from financing a traditional residential or multifamily property?
Well, a single family is really based on sales comparisons of other comps in the area, not based on income, whereas these assets are based on their in-place income or their future incomes from value-add types of transactions. So we underwrite these deals from a cash flow perspective versus a single-family home. And then as far as a multifamily, that's a cash flow business as well, but it's considered an investment, meaning it's not really an operating business in the mind of SBA, so they won't make those loans. SBA is really for owner-operated businesses. They consider RV parks with daily stays or weekly stays a business. They consider an Airbnb, a B&B, a bed and breakfast, a boutique motel. Those are businesses that need to be operated. So it's an operating business, which then makes it eligible for SBA financing potentially.
Got it. Can you walk us through a recent deal you financed in the space, what the structure looked like, and how it came together?
Sure. I'm going to talk about a deal, an RV park deal. And this deal, it was a conversion project. And so it was an existing RV park that was not running anymore, meaning there was maybe out of the 14 pads, a pad is where one of the RV park or mobile home would sit. And so it was a non-performing RV park / mobile home park that was basically just dirt value. And so the buyer vision was to come in and to change out these RV pads, these mobile homes, and put on cottages, essentially like mini houses. So that is eligible as well. So you're taking like a non-cash flowing asset and converting it to a higher and better use by creating a little resort. And as long as those cottages are rented as a business, meaning daily stays under 7 days, then that would actually qualify for SBA financing. So you can do these conversions. We've done RV parks. We've done motels. You can do expansion on motels. So if you own an existing motel and now you want to go buy another motel, well, you might even be able to get up to 100% financing on an expansion. So we've done all those types of deals.
What should a buyer prepare before approaching a lender for one of these deals?
Just have your crap together, meaning if you have an existing business, make sure your year-to-date P&Ls, you got balance sheets. You put together an overview of the deal. I'm buying this RV park for $1 million, and right now there's 40 pads on it. So we call that like an executive summary. Just give me an overview, which you could probably bust out on ChatGPT in about a minute, about the project, and then 3 years of your personal financials, 3 years of business financials, financial statement. And that's really the majority of what we're looking to do. Obviously, if it's a purchase, the we're looking at the tax returns from the seller. So we want 22, 23, 24 business tax returns from the seller, year-to-date profit and loss, and a balance sheet. So we put that all together, and then we can essentially do a cash flow analysis, or it could be a value-add deal where it doesn't have enough cash flow to support the loan, but it will after we do the improvements to the property. And that's completely eligible, assuming that we can get the property, we get the permits in hand prior to closing on the SBA loan. So we can do all sorts of, we can even do ground up construction on RV parks or motels and boutique motels and bed and breakfast.
Okay. Are there any red flags or common mistakes you see that kill deals like these?
Does the borrower have enough money to put down as a down payment? Does the borrower have enough post-close liquidity? Does the business cash flow? Does the borrower have any experience in hospitality? Does the borrower have outside income? Does the borrower have a resume with transferable experience? Does the borrower have good credit? That's really the meat and potatoes of if this deal is going to work or not work.
How does SBA financing play a role in these transactions, and when does it make the most sense?
If the borrower wants higher leverage and has decent financials and good credit, then it usually makes sense. Why it might not make sense if it's you need to close in a week, you're not going to get one of these deals done in a week. You need a bridge loan. But all in all, it's probably the best financing tool out there for these eligible businesses.
Can someone own one of these businesses semi-absentee, or do lenders expect full-time owner-operators?
I mean, yeah, these types of businesses, you don't need to be boots on the ground. Obviously, it helps if you live in the vicinity, but we do deals all the time where it's across the country. So if the deal makes sense and it makes sense from an underwriting standpoint, that some underwriter in Nebraska is going to be going through the file and they go, okay, this person's done a lot in these types of business RV parks. They have experience. And even though it's 4,000 miles away, they've already shown that they can run these types of businesses remote. So we just help take what you have, package it up, and put it in the best light possible to hopefully get your deal approved.
All right, great. Beau, that was packed with value. If you're listening and thinking about acquiring or financing a hospitality asset like a motel, B&B, or RV park, Beau's the guy to talk to. Head over to bookwithbeau.com to book a call and see what's possible. Thanks again, Beau.
If you're a solopreneur or small business owner, listen closely. Business growth isn't about working harder. It's about building smarter systems. It's about automation. And that's exactly what Go High Level Hire helps you do. Build your funnel, automate your follow-up, manage your team, all in one place. Click the link below, activate your trial, and see how much more efficient, automated, and profitable your business can be in just 30 days.
Hey guys, Beau Eckstein here. If you enjoyed what you saw, please subscribe to this channel. We talk all things financing. I've been in the lending industry for over 20 years, and I'm happy to answer your questions and provide great content.